Welcome back to the channel where I give you my market analysis, and I got a special treat for you guys this week. I give you guys my trade of the week. This was a fantastic week in the stock market. As you guys can see, the headlines are reading the S&P hits a 9-month high, right? We're looking bullish, man. We're looking good all across the markets. You guys can see that SPY is literally going crazy. Super excited right now, right? The market has huge optimism. You guys can see we're in this nice uptrend, but it's looking like we might end up hitting some resistance. So make sure y'all hit that like button and subscribe so y'all don't miss any of the future content. We're going to do a deep dive into what's going on in the markets on SPY. As always, this is my own information. I don't go and piggyback other content creators. I actually live this. I do this trading, swing trading. Just to give you guys a little bit of background on me, I am a long-term investor. So a lot of my long-term holdings are in something like SEHD, the S&P 500, XLK, Apple, Amazon. I actually ended up adding some Amazon into my account this last week while it was at 115, and we had the huge pop on it. I think it popped like 4 or 5%. I think like the following day or something like that. So that made me feel really excited, really optimistic on what's going on with the markets. But I am aware that we don't run forever, right? The stock market does not go up forever, and right now it seems like we are heading into some resistance here. So you guys can see here, I was waiting for this breakout from SPY from the 416 level. If you guys follow me on Twitter, make sure y'all follow me on Twitter, because I do be giving out this information. I post my charts on there before things are happening, making my predictions. I told you guys, if this thing breaks 416, 417, I'm looking for it to run past and get into the 429 zone. We still haven't quite hit that yet. We're sitting at about 427. I do believe we still have some legs. I'm not saying that the rally has to stop as soon as it gets to 429. It can blow past that and continue to move into the 454. So I don't think that's super likely, but it's definitely a possibility. So something that we're looking out for, like I said, 9 months highs on the S&P 500, man. This is insane. You guys can see here, this is Seeking Alpha. It kind of shows you my portfolio. Doing amazing. We're doing good. But what I really want to show you guys in this video is a trade that I found on XLY, which is the consumer discretionary stock. And you guys can see here, I've been in this trade for a while, but I'm gonna show you guys why I got in it at first, right? So, and this is actually not right because my risk reward is basically down here. So I had a 1.4 to 1 risk to reward ratio on this trade, which is a fantastic ratio. It was a very good trade for me to take, and it was my setup. This was something where I saw consumer discretionary consolidating for quite some time. It made a move up. It wasn't able to break that high, but it wasn't making new lows. So at that point, for me, I consider that to be a consolidation zone. So right now, I was just chopping in between that zone, and what I'm looking for is a break past 149. Once I get that break past 149, I'm looking to see an aggressive bullish movement to the upside. We ended up getting that on Wednesday, May 17th. And I want to go back and I want to show you guys some of the holdings that the consumer discretionary stock has, because it plays into the fact of why I was so bullish on this trade, why I was so keen to take this trade. And the reason is because I like to look at all, like if I'm trading an ETF, I like to look at some of the stocks that are in the ETF that I know are going to move that fund. One of the top stocks in XLY is Amazon. Amazon has a 23% it makes up 23% of the fund, and Tesla makes up 13% of the fund. So let's go look at these two real quick. And I told you guys that it made that bullish movement on Wednesday, May 17th. So we got them all up. May 17th, you guys can see here, Amazon ended up breaking past its little consolidation zone, right? I saw a little spot here where I was like, hey, I don't see Amazon getting past this 112 zone. That was a trade that I actually ended up taking. I didn't take this one. I took the first one. It ended up getting to that zone, that 112 zone, which I felt was going to be resistance. Touched that and then continued to consolidate in that zone for a few candles, and then gave me a nice bullish upside, breaking previous highs and showing me, hey, this thing can still run. And you guys see the movement that we got on that. Tesla, let's go take a look at that. May 17th. May 17th, we ended up dipping past that, down below that consolidation zone, and then getting us up right back into it with the bullish candle. If you guys know anything about the markets like to inflict max pain. So when I see that breakdown to the downside, even though it was a pretty convincing breakdown, it wasn't I didn't want to go in and short Tesla, right? Because we had just came off of those previous lows, and we're not making new lows. Once I saw it give me that bullish candle going back up into the upside, back into the zone, I kind of thought, hey, this might have enough momentum to rip past that previous high and continue to move in an upwards trajectory. So both of those things were aligning. These are one of the top 2 holdings in XLY, and you can see how on May 17th they all lined up to show me that XLY is going to have a nice bullish movement. Now we ended up getting a pullback on the 25th. I'm sorry, on the 26th. Most traders would have gotten out of this trade here. And all I got to tell you is you got to allow yourself to be wrong. If you come out of the trade early, you don't set your stop loss in the right spot, you're going to take unnecessary L's. When you see the nice upward movement, then you get that pullback. If you don't have your stop loss set in the right area, you would have been stopped out here and you would have missed out on this trade. You guys can see it was a 1 point. I think I ended up getting out a little further up. But anyways, it was a 1.4 to 1 risk reward ratio. I risked 2% of whatever I was putting up to gain 4%. This is a fantastic trade. I know you guys are seeing options traders out here getting 1,000%, 2,000%, but I'm gonna let you know, I'm playing the game slow and steady, taking this as easy, as I can possibly get it. So this was my trade of the week. A couple of things that I'm looking out for this week are XLE. I love the movement on XLE. I don't really much like that gap that it gave us, but I am looking to trade. You guys can see I do have a trade here that was set up. I did not enter this trade, but when I saw this bullish engulfing candle off of this support zone at 76.63, I know that this has some momentum to run. Again, I don't like this, that it left this gap in here. So I'm really looking for it to come back into this gap zone, fill that gap zone, continue to show me bullish momentum, and then I'll end up taking XLE. So I just gave y'all a tip for next week for something to look out for. Don't say I didn't warn you. Anyways, I hope y'all enjoyed the content. It's your favorite investor, man. Don't do nothing I wouldn't do. And remember to always protect the capital. Make sure y'all go ahead and hit that like and subscribe for more future content. I love bringing this stuff out to you guys. I've been a little bit busy. I haven't been able to drop the videos as I was before, but we getting back on the train, getting back consistent. We got a lot of things to be excited for. So make sure y'all are doing y'all homework, do your due diligence. Don't enter stocks just because other YouTubers or traders are telling you to enter. You got to do your homework yourself, man. But I hope I gave you guys something valuable in this video. I'm gonna catch y'all on the next one. Peace.